Now let's go and get even more detail with Mike Kendall from JB Weir. Hi Mike, how you going?
I'm very well, Peter, thank you.
Okay, a big gain. Is it 5-year highs for the market today?
Yeah, pretty close to 5-year highs, so a great result for investors that have certainly been weathering a pretty difficult environment over the last 3 or 4 years, but it's good to see particularly that we're holding on to the gains in the first quarter and starting to build on those off the basis of some positive economic data flow.
And now we get into bull market territory, and if so, what's the definition?
Well, look, I'm fairly cautious of using terms like that, Peter. I tend to think it'll be more a case of steady as she goes. We're certainly heading in the right direction, but economic data flow is really influencing the behaviour of Australian markets in particular, and interest rate cuts, economic policy, economic tools, and those things can be very volatile both on the upside and the downside. I'm pretty clear that the trend is heading in the right direction, and that is improvement overseas, particularly helping to lift sentiment here. But I'm a little bit cautious on getting too bullish and saying this market's going to go rocketing ahead. I don't think the signs are there that that's the case.
But since mid-November, we've been up over 20%, which is a pretty strong indicator, isn't it, mate?
Yeah, look, it is a positive indicator, but at the same time, Peter, you'd have to argue the RBA wasn't cutting interest rates yesterday because the outlook for the Australian economy is fantastic. There are a lot of other factors at play, such as deposit rates falling. There's a huge amount of cash out there, particularly in the retail space, and as those interest rates come down, those people with term deposits are going to start to look to other places to try and drive yield performance from their broad spectrum of investments, and the equity market is a prime candidate, and that's one of the things we've really seen drive the markets over the last 4 or 5 months, has been that chase for yield, and that was certainly a primary driver and has been and should continue to be, I would say, for a couple of months yet.
Do you guys think there'll be another rate cut, say, before September 14?
Look, I'd be surprised. At the moment, our analyst is forecasting November for the next rate cut. We were calling for one yesterday and we got it, which was certainly good news and a shot in the arm. I'd be surprised if we saw another one before the next election, but again, I think we'll just keep a careful eye on the data flow, but at the moment we're saying November, Peter.
Now, do you think there might be a confidence bounce after September 14, Mike?
Well, look, again, an interesting question. I was chatting to some people over the last week, and they prophesied that if there was potentially, certainly depending on what the result is, if the polls are right and the coalition takes power, they're going to have a look at whether the coalition has a comfortable majority. And the other thing they're going to look at is how the coalition's going to manage what's expected to be quite a large deficit. If they move into a phase of quite aggressive fiscal spending cuts to try and get the budget back into balance, that could actually be contractory for the Australian economy. So there's quite a lot of speed humps in the way, such as the election, how it will play out, if there was a change of government, how they'll deal with the fiscal problems, what the current government's going to do. All of these issues are still road humps, so that's why I'm a little bit cautious on getting too bullish, although certainly putting the gains in the bank that we've had so far has been a pretty good outcome for investors so far.
Without a doubt, without a doubt. Let's go to CSL. What's the story there?
Look, a little bit of a surprise there, and I certainly had to do some very quick hunting around when the markets opened this morning. The stock price came off around 5%. It was a big drop. It's been a market darling for some time. One of CSL's peers, US-based Baxter, announced to the market that they've been doing some clinical trials in relation to Alzheimer's disease. It looks like those trials have not been as effective as Baxter would have liked, and they're effectively postponing those for the moment, if not calling them off altogether. They were looking for certainly improvements in the condition of patients, which didn't show through to the level that they would have liked. Now, CSL are undertaking similar trials, so it's sort of, if you're in the same circle, you're being classed as guilty at the moment. It's been for a strong run, and that news from one of their competitors disappointed. So a few people predicting there that if it hasn't worked for Baxter, it's unlikely to be successful for CSL. Been for a strong run, let's just put profit in the bank and see how things play out. So that stock under a bit of pressure. Be interesting to see over the next couple of days how it continues to perform. It's been for a monster run. Nibbled for a couple of clients today, Peter, but certainly you have to take a 3 or 4 year view on a stock like this because it's not cheap, but it's very high quality.
Yeah, look, I love CSL's track record, but I still don't understand the things that can make or break this company, and that's why I avoid it. One company I haven't avoided in the past has been a great company to me, and many other people watch this show, is Coca-Cola, CCL. What's going on there?
Well, look, they announced the downgrade yesterday, surprising the market. A lot of competition in the supermarket space. I think, from what I understand, Pepsi and Schweppes are both putting a lot of pressure at the supermarket level with discounting. This has really hurt the margins, as has the performance of SPC. Now, that came out yesterday. The stock was sold off. I was interested to see with the strong market whether the stock would bounce. We did see it push back through $13 for about an hour and a half in trading today. Wasn't able to hold it. Look, it's a very high quality blue chip stock. A few issues there at the moment. I was starting to nibble for clients today, Peter. So when you see a stock of this class be sold down, it's a time for clients again with a 3 to 5 year view. It's not a stock to move in for a trade because there's a few question marks on earnings in the short term. But on a 3 to 5 year view, in a market that's pretty tough to find any value, this is one that would have to be on the radar screen of a few.
Yeah, I'm thinking dollar cost averaging every time it drops too, mate. Let's go to 7 West Media.
Look, the company having an investor day today, they're indicating they had a very big bounce. They indicated that they thought the worst was over for the group, that even if advertising revenues continue to be very soft, they've done a huge amount of work on the cost side of their business. And while profit might be a touch below last year, they think they're through the worst of it now and things are looking better. Investors liking what they heard today, and the stock price up over 10%. So it's been to hell and back over the last 3 or 4 years. There'll be a lot of investors out there that have bought the stock, even after the bounce today, at significantly high levels. Not enough in the announcements today to tempt me to dip my toe back in the water with the stock. I think new media is a place where I'd be putting my dollars as opposed to old media. But the company have done a lot of work to turn things around, and hopefully they can put some scores on the board for shareholders. And today was a good start.
Now usually free-to-air television stations do well in an election year because governments spend money on TVs. Do you think the new media is going to actually reduce the benefits of an election for a company like 7 West Media?
Look, I'd expect there to be some shot in the arm for all of what we'd call traditional media players. But if you look to the US election, both the Democrats and the Republicans had huge social media campaigns. So I'm sure that it could also be a positive benefit to some of the new media players as well. And that's where you might actually see, whereas once upon a time, old media got 100% of the pie, maybe this time they'll only get 75%. So still something there, but maybe not what it once was. And this is a constant theme that they're going to face, Peter, moving forward.
Okay, Mike, on Monday in the Switzer Super Report, I stuck my neck out, argued against Roger Montgomery and said the BHP was a buy, and I've had 3 or 4 good days. Did I get it right, or is this going to be a temporary situation where Switzer looks like a genius?
Well, Switzer generally looks like a genius, Peter. So, I've been buying BHP, and we've commented on this probably each week for the past 3 or 4 weeks that it looked pretty good value, $31, $32. But on a 3 to 5 year view, when it gets up to $34, $35, I'd probably be tempted to put some in the bank. The China story still looks promising. The US is picking up. But I'm a little bit concerned longer term about the iron ore price and whether that can hold or it's going to continue to slide off. There's natural growth in demand for iron ore out of China, but look, the easy money's gone out of the stock price at current levels. 31, 32, it was a good buy. I'd probably be holding and just watch the data flow as to whether I was going to step up again. But it's a high quality company at these prices, long-term buying.
Well, one part of the news story, which a lot of people seem to be ignoring, is one of the reasons why I went to Japan, is that Japan is still a big buyer of iron ore and coal. Its economy has been struggling for some time. Now we've got a new Prime Minister there who's going both fiscally and monetarily to try and inspire the economy. And we've got also the yen dropping 20%. Could Japan be a surprise story over the next year or two that could help commodity prices? If you don't know the answer now, I'd love you to talk to some of your pointy-headed buddies, you know, in your research departments. Because
Yeah.
I just think the Japan story is probably being ignored because it's been a shocking performer for 20 years. But they are actually doing some different things now, and that yen has dropped 20%.
Look, I'll do a bit more analysis so I can provide, you know, a full comment. But I suppose my gut reaction is that you're right. I suppose Japan's been taken as the poor relation for some time. They are doing lots of interesting things. You know, a kick up in their economy, or the weakening in the yen, seeing more demand for Japanese cars, and unfortunately at the expense of Australian auto workers. But that does also result in demand for Australian iron ore. So probably a bit of a catch-22 in terms of the overall economic impact. It could be a net positive, but I still think China's the main game, Peter.
Yeah, but the funny thing is, I just saw some data that Japan is still the third biggest contributor to global demand. You know, China's first, USA second. USA, of course, buys everything from itself if they can manage it. And then Japan's number 3, India number 4, which really puts us in a strong position because, you know, 3 of the top 4 contributors to world demand are our top customers.
Yeah, it just depends on what they like to buy from us, and be better if it was more manufactured stuff as well as our raw materials, but time will tell.
Yeah, certainly we'd better also if the Australian dollar was a little bit lower. Now, tomorrow we've got consumer and producer price index stuff coming out of China. What was the trade figures? How did you guys react to those trade figures from China?
Look, they were certainly a surprise. You immediately saw a big bounce in the resources. They've been oversold for some time. And I think there was a lot of short covering in the resources sector today, Peter. So a lot of people were surprised that the numbers were as strong as they were. But again, it's this overall trend that slowly China looks like it's coming out of 12 months of a bit of a malaise. The US looks like it's turning around. I'm trying to step back because month to month the data will be volatile, but the trend is suggesting things are improving, albeit slowly now. Again, I'm not saying, as I indicated at the start, we're in for a bull market. Looks like we're consolidating the gains of the first quarter, and we're positioning ourselves for more positive moves as we run through the course of the year.
Okay, Mike, talk to you next week and make sure you have some wonderful budget observations.
I shall do, and just watch out for that NAB result tomorrow, Peter, as well.
Without a doubt. Fantastic, Mike.